Peace YouTube. It's your boy Ruger Love Money, back with some more Love Money for y'all. And today we're gonna talk about the insolvency of these major crypto exchanges like Voyager, Celsius, and the possible insolvency of these other exchanges. So basically, what insolvency means is a company can't pay off its debts, right? And in some cases, right, in this case especially, it seems like the company can't pay people their money that they've put on their platforms, right? So we've seen Celsius pause all withdrawals, all transactions, basically withdrawals, swaps, transfers, everything. And now June 1st, Voyager came out and announced that they're pausing all transactions on their platform. So I did a little research, did a little digging. I followed the right people, and I came across something that kind of explains why a lot of these things are going insolvent and can also be held partly accountable for why there's such a big drawdown in the crypto markets right now. All right, so boom. Okay, so this is Miles Dusher on Twitter right here. However you say his name, he's a popular crypto YouTuber, right? He's on Crypto Banter. I'm gonna leave the link to this tweet or this thread in the description below. So basically, to summarize this tweet or to summarize this thread, it talks about Three Arrows Capital, which is a crypto venture capital fund led by these two guys. And at their peak, they were managing $18 billion in assets, making them the top three venture capitalists in the space. Some of their most successful investments include AVAX, Near, and ETH. So they made some good plays. Don't get me wrong, but they made some bad choices too. And there were rumors about them having margin calls and things like that, right? So one thing I found interesting was that it was revealed that they had $245 million of ETH deposited on Aave, which is a popular lending platform. I even use it. From the 245 million, right? They borrowed 189 million dollars in USDC and USDT. So they pretty much deposited 245 million dollars in Ethereum, and they borrowed against it, borrowing cash. So on Aave, they let you borrow against your money. So I want to say that the standard is something like 50%. So essentially they should have borrowed something like 120 million or 100 million, right? And that would be like on the risky side. I know that there's a loophole. So if you take the money, right, let's say you borrowed 189 million, you can put the money back in. So now it seems like you have more capital, and then you could borrow against that over and over again, right? And what happens is, right, these guys are making bets. Now this is just one platform. You see at their peak, they managed $18 billion. So on just Aave alone, they had $245 million. So if you're betting on crypto going up, going to the moon, right? They probably thought, all right, I put $245 million in here, right? And let's say ETH doubles or ETH goes up 50%, the 245 million, if it double, would be 500 million, right? They borrowed 189 million. So now the money that they had to pay back, they could actually just pay it back out of the 245 million because it's 500 now, and they'd still be up like $60 million. You get what I'm saying? And then the 189 that they invested somewhere else into, let's say, more coins would have probably doubled, and now they'd have made over set turned $245 million into $700 million. Now what happens is if ETH gets cut in half, which it did that a couple times. If ETH gets cut in half, now the $245 million is only worth 110 million, and they have to pay back the $189 million that they borrowed. So with that being said, they're taking double losses. So instead of them hitting that 700 million that they probably already counted or thinking that they're gonna have, they got cut in half, and now these guys are in the hole bad. All right, so I'm gonna leave a link to that tweet in the description so you can read all through that. It's about 25 tweets long, and there's other threads within it, so check it out. But pretty much what happens is they have a margin call, so they'll basically be like, "Yo, you're about to be liquidated, right? So you might want to sell some of your assets off or things like that, right? Just cover your funds, cover your debts, whatever, pay people back, and go back to cash or go back to having what you had." These guys were on different platforms, right? different lending platforms like Voyager, platforms like Celsius that allow you to borrow against your coins. They allow you to borrow, lend crypto, things like that. A big company comes and borrows 100 million from a platform, the platform is in trouble. And that's pretty much what happened here. Because when they don't pay it back, the companies take too big of a hit, right? They don't have other people, you know what I'm saying, on the other end of that covering that $100 million loss. So now the company goes into debt that allowed them to borrow that money. And that's what we're seeing happening, especially with decentralized exchanges, especially with the smaller ones like Voyager and Celsius, who aren't as big as crypto.com or Coinbase and can't cover some of these losses. Right. So pretty much it's sending things into a domino effect. And these guys, right, it was said that these guys took a loss on the whole Luna situation, and once they took a loss on the Luna situation, they started getting more aggressive with their margin trading. So basically, these guys were borrowing money, right? Borrowing money and making big bets on crypto going up. They were basically leveraging long on all these different platforms. So when they leverage long on platforms, what they're doing is they might have like a 10x leverage or whatever on ETH. So every 1% that ETH goes up, their capital goes up 10%. So it goes both ways. So when things start to go the bad way, they go the bad way really fast. So these guys made bad decisions, and then instead of them cutting their losses, they just like went ghost on some of these platforms and decided that they weren't going to be paying back their losses. And they're playing with so many millions of dollars across so many different platforms that all these platforms who can't cover those big losses are taking hits left and right. And now it's backfiring, right? Or spilling over to the retail investors, right? So the retail investors are now trying to take their money out or trying to do things with their funds, and their funds are getting locked up. They can't the companies are insolvent now, so they can't give people their funds. They can't allow people to trade and take their money off and things like that. So it's really causing a big domino effect. And these people who have these millions of dollars invested have them across different platforms. And as they get liquidated here, and there, it's just creating a more and more of a domino effect of big sell-offs, millions of dollars of sell-offs going on all throughout the blockchain, all throughout crypto. And BlockFi, right? I'm gonna leave a link to the BlockFi thread that BlockFi dropped, talking about how they managed to stop, right, the the forced liquidation on their platform, right? So it's good and bad because the centralized exchange, they actually have more control. So just like they're pausing withdrawals, they could also stop these big accounts from selling off, like doing forced sell-offs and stuff like that before it's too late. So yo, go look into some of this stuff, do some research on it. Um, I really came up here just to tell you why some of these things are going on, why um some of these companies are pausing their transactions, right? So it kind of gave me a good explanation. I'm like, all right, boom, that kind of makes sense. These people were just being degens, and now it's having some consequences. So what can you do? All right, boom. First thing you want to do is take your money off of centralized exchanges, right? There's also rumors going around that Coinbase is selling people's information to immigration and customs and showing people's geohistorical data and their transaction history, right? They're giving these things away. And there's other rumors that so Coinbase has been selling their information and data, people's information and data to different companies for a while, right? And the state and the government, things like that. So first, best thing you could do is take your money off of decentralized exchanges and move it to a hot wallet like MetaMask or Trust Wallet, or move it to a cold wallet like a Ledger. So your coins will be a lot safer than being on these centralized exchanges, and you'll have lesser chances of some of these things happening, especially the platforms that are smaller platforms and offer a lot of lending and borrowing. You know what I'm saying? So that's all I got for you guys today. Leave anything in the comments, right? If you there's something that you want me that I mentioned that you want me to go more in depth to, leave it in the comments below. Make sure you share this with a friend because this is about our safety in crypto. I don't want people getting scared off. You know what I'm saying? Because there's means of going around this, and that's why it's good for you to do research and go down the rabbit hole so you can find the different ways and the safest ways to maneuver this space. Because if you're just buying a little bit of crypto on this exchange and then they tell you you can't withdraw, you're gonna be like, oh no, I don't want to mess with crypto no more. Don't get scared off. You know what I'm saying? Do more research, get more in depth with it. And I think it's I don't know if it's good or bad that this is going on because I know it's bad that these people are getting liquidated and they're having this such a big effect on crypto right now and on the markets, but it is making people be more aware of the dangers of centralized exchanges. So people might start maneuvering to these decentralized exchanges, and now things might either A get more regulated or B get more decentralized. So let's see what it happens, man. Nobody really knows. Nobody can tell the future, but best thing we can do is prepare for it. Peace.